It's the 5th of September, 2015, and this is episode 244. This show is intended for informational and educational purposes only. Cryptocurrency is new, empowering, and exciting, but we're not experts, just obsessed companions walking the road towards a more peer-to-peer future. On today's episode of Let's Talk Bitcoin, we're at the recent Keynote 2015 conference, courtesy of Mo Levin and Rob Mitchell of the Bitcoin Game. This time, we're listening into the folks who put their money where their mouths are. With this, the Investing in the Blockchain panel. Enjoy the show.
I'm Evan HANSEN. I'm an editor at Medium, which is a new platform for writing and reading that's created by Ev Williams, the creator of Twitter. And we've started to see a ton of people writing about Bitcoin and blockchain. And so that got my interest, and I've been meeting with people here at this conference, Keynote 2015, and trying to spark even more, better, deeper conversations about these issues on Medium. Joining me today, we have Bill Tye, Kite VC, the prolific investor and angel investor. RAFE FURST, he's a co-founder of Crowdfunding. Matthew Rosnick, Tally Capital, no, not here. Steve WATERHOUSE with Pantera Investment, and we have Brock Pierce, chairman of the Bitcoin Foundation, and also the co-founder of Blockchain Capital, and Mark Vanderjus, Cross Pacific Capital. So this is a fantastic group of people who've been doing a lot of work investing and identifying companies, trends, ideas to take blockchain and Bitcoin forward. And it's a really awesome time to be thinking about issues about investment in these areas. We've seen a number of big inflection points, which I would describe primarily as the emergence of the blockchain and infrastructure alongside Bitcoin and currency as a real investment opportunity. The entry of the big traditional financial players into the investment space in blockchain, and a huge acceleration of investment in this area. Mattermark recently reported that Bitcoin is the fastest growing area of VC investing right now, growing at 151% year over year as of January. And so just to frame up the conversation here, I want to sort of deal with three main talking points. And the first is just where are we in terms of the currency era of blockchains, aka Bitcoin, versus infrastructure and the blockchain, post-currency era, and the impact of the traditional financial companies in the space. And Brock, I was hoping that you might kick it off. You just created a $7 million fund for blockchain investment. You changed the name of your firm from Cryptocurrency Partners to Blockchain Partners. So I'm just curious, what is your take on the investment opportunities now in currency versus blockchain? Have we shifted to where there's still real opportunity in Bitcoin currencies, alt currencies, Litecoin, and so forth? Or have we really moved to a place where blockchain and infrastructure is where the real opportunities lie?
Yeah, I mean, I think the first sort of wave of, call it venture and angel investing into the ecosystem was really around Bitcoin and building out the basic infrastructure. Think of it as the bridges, the roads, the tunnels that made Bitcoin usable. If you compare it to, call it the early internet, when you had TCP/IP, that was great, cool things could be done with it, but the average person wasn't able to use it until you built things like email clients and browsers and DNS and search. And so in a similar fashion, I think most of the early sort of investments was in what I call basic infrastructure around Bitcoin, though there's other applications, as other things get built on the blockchain. I think most of the sort of, those bets have been laid, at least in the developed world. There's still, I think, early sort of call it basic infrastructure bets that can be made in the developing world. But I think most of what we're looking at today are the more advanced sort of, call it 2.0 applications that are centered around blockchain, finding uses for this technology beyond just Bitcoin. And beyond even just things like financial markets. I mean, the stuff that I'm most excited about is seeing interesting use cases where people are taking this distributed ledger technology and applying it to, just a lot of industries that are old and still kind of built for a world of paper.
Bill, maybe you could weigh in on that. Just tell us what you think are the most exciting areas here for you, what you're thinking about.
Yeah, so to frame it a little bit, so I look at the technology underlying Bitcoin, of course, blockchain, as something that's basically a virtualization technology, meaning you can represent something with something else. And if you think about it, we're in a world now where there's so many little assets that historically have been underutilized that now are getting more efficiently utilized, like Uber with black cars, or rentals through Airbnb, and that can really be applied to anything in the so-called sharing economy. And if you think about it, Uber, in a way, is an expression on top of a software platform that allows the temporary transfer of a car for 5 or 10 or 20 minutes. And they built all that stuff, and it's very efficient, and it's proven to be incredibly useful. Whether you express a car or an apartment or a piece of value in a coin, it's all kind of the same thing. So I'm looking at blockchain as essentially a kind of like TCP/IP. It's a software protocol underlying the efficient utilization of assets of any kind. And you'll hear a little bit more about it later, but we did this little thing on Necker Island with Richard Branson, where I got a bunch of people to think about applications to be put on the blockchain for social good. And you'll hear some things that came up there, anything from carbon credits to trackers for social media to land titling. There's so many things that can just, as Brock said, get rid of reams and reams of paper. So I think it's a massive opportunity. One more thing, like if you think about, say, like there's so many Japanese trading companies. Everyone's heard of Sumitomo or Seito or Mitsubishi or what have you. If you think about the structure of those companies, they all have a bank, they all have a shipping line, and they all have a skyscraper in Tokyo with 15,000 people each processing boxes of fax paper, tracking stuff around. That there's so many things, so many assets in every category of everything in this world that need to be tracked, and you can express it all on the blockchain. So it's hard to answer because it's so big.
Rafe, you pretty much agree that we're kind of past the currency investment zone and we're totally at the 2.0?
Yeah, I agree with that for sure. And I tend to look a few years out, and what I see as the most exciting is even the 3.0 for technologies for helping us organize activity. So distributed governance, for instance, of corporations or even governmental bodies. I know, Brock, you were up at Ephemeral where they're doing floating nation states. So how do you organize the behavior of people? How do you track things like who owns what portion of the cap table? So distributed ledger technology really empowering a new way of organizing people, whether it's in corporations, governments, or NGOs. I think that's really exciting and just wide open.
Mark? Yeah, just again, would you weigh in on this? What about the altcoin and the Bitcoin kind of as an investment opportunity right now?
Well, I mean, I never really invested in any altcoins because I feel that something that has the network effect is very difficult to beat. So I always focused, in terms of currencies, I always focused on Bitcoin in the beginning. And I also don't think any altcoins will have a big future. I do think some tokens could be valuable. I mean, they don't have to be Bitcoin tokens. They can be different kind of tokens, but they won't be currencies actually. And also, I mean, Bill, I agree fully with what you just said. But I think the era of Bitcoin as a currency or cryptocurrencies in general is not over yet. I think it's what's missing at this point is really the killer app. Once that killer app's there, I think it could still take off. I think we're too quickly saying, okay, blockchain is the next big thing, and sort of forget about Bitcoin as a currency. I still think it could happen.
But just for the record, I'm still very long Bitcoin. And in the world of currencies, today's an interesting day. On Thursday, last Thursday was Frontier, the launch of Ethereum, and today is the first day that Ethers begin to trade on all the exchanges. So it's kind of an important day for alternative currencies.
Yeah, I agree. I think I draw the distinction between investing in the currency and investing in companies that are using Bitcoin primarily as a currency function. And so, for example, remittance, cross-border trade, those kind of applications. And I think we are starting to see the emergence of real traction in those areas. I think that the big surprise for me was how fast the financial institutions are adopting the blockchain technology internally. I just got back from New York. I was at a different conference last week, the American Banker Conference. And the audience was full of people from Wall Street. And the conversation at a reasonably high level, Bill was also in a meeting with myself and some Wall Street executives. The conversation is that the revenues in these organizations, they're not cranking up like we're expecting startups to do. They're relatively flat unless they buy another company. And so the way to make more money, more profit, is to cut costs. So blockchain emerges as this technology to cut costs in the back office, whether it's doing a securitized debt, issuing private stock, public stock, intraday liquidity. There's a whole series of applications that, unless you're inside a bank, you don't really understand. So there's people coming out of those banking environments and starting companies. There's people inside those banking environments getting this technology and using it. I think what we'll see further down the line is the convergence of these two ideas. So you have a whole bunch of contracts eventually written on the blockchain. And then if you want to settle those contracts, of course, you can do a wire, or you can use Bitcoin, which will probably be a lot more convenient. So I think eventually we'll see a convergence because of that interest from the financial services space.
Yeah, actually, I want to chime in on that because he and I were meeting with, I guess, operational executives at one of the largest, literally one of the largest banks in the world, and getting a handle on how they're measured and what's important to them in terms of their own sustainability. And the important thing I took away from a piece of what you just said is that the banks are really measured on kind of capital ratios and efficiency of the utilization of those assets. And so they're basically measured on return on assets. And to the extent that there's a technology that brings a lot of efficiency in that either reduces that asset pile that they have to hang on to or allows it to be used more quickly, kind of like working capital. How many inventory turns, how many working capital turns can you do? It's better for them because they can't grow their top line very much. And blockchain is essentially, it's a supremely efficient way to kind of keep track of your assets and quickly turn them over. So I think they see it. We had that kind of head of operations, head of back office, kind of keeping, whether it's keeping track of ownership of securities or the merging of multiple acquired entities. So all the big banks now have been really the result of the consolidation of lots of other pieces of their banks. So they have kind of a spaghetti mesh system of lots of different acquired things, and they'd like to just hit the reset button, wipe it all out, turn it into one common platform. It's going to be a while, but...
Yeah, so I was reading some of the coverage of the American Banker Conference, and it seemed like one of the big takeaways from that was there's a split between the people who are almost pro-Bitcoin blockchain, saying that the future is going to be built on that. It's the most robust, it's the most secure, it's got momentum, and the banks who seem very clear that they want to separate themselves from the Bitcoin blockchain. And is this like a permanent fork, or is this something that eventually comes back together again? Is there a way for these two worlds to interrelate?
I think, the Bitcoin internet analogy isn't perfect, but one thing that I am noticing is in the early days of the web, people like to call the internet the information superhighway or some other version of this, and then they had things called intranets, which we still sort of use somewhat, but we don't really talk about so much. And there was even concerns that we were going to run out of internet addresses, and then people discovered network address translation and ways to segregate your firewalls and so on. We're just seeing the emergence of the same idea, which is that the same technology is going to be used inside banks in what they're calling private blockchains. They're trying to relabel these things distributed ledgers rather than Bitcoin or blockchain. But like one of Bill's investments, Bitfury, these guys have the best ways to secure this network, and the banks are going to need that technology internally as well, because last time I checked, these guys still have problems with bankers running off with money, traders running off with money and hiding it, and causing huge holes in the end. So there are fraud and security problems inside banks as well as outside banks, but there's no reason why you should need to know everything that goes on inside a bank, or in the Internet of Things example, you don't need to know every single device that GE has on the blockchain. That stuff is easily hidden and doesn't need to be public.
All right, so let's shift to some more specifics. And what are some of your favorite examples of non-currency blockchain investment opportunities? Rafe?
Well, I mean, if what you're saying is true, then I think there's a real opportunity for folks who are building the glue between the various different blockchains, right? So, I would ask, you, Steve, if you know of any particular companies that are working on that problem.
Yes, it's a little challenging for me to call out companies because we are doing some deals, some of our first deals in the blockchain space outside of financial currency, but they're not announced yet. But we're seeing great investments in the Internet of Things space, and I think, as you were saying, I think there's really interesting opportunities for people building mining technology and blockchain software to sell that into organizations like the financial services. I think there's, and then provide services on top of that. I think there's some interesting ideas there to work on. I echo this idea of the death of paper. I mean, we print things out, we make them in a computer, print them out, and then sign them and then scan them in, and it's just, there's nothing digital about what we're doing. And I lose pieces of paper all the time. If you give me a ballet ticket, it's gone within minutes. I don't know where they go, but they're all gone. So even that example, conference passes, the whole space of things where we use pieces of paper to authenticate ourselves. I think the identity space is fascinating, whether it's identity for people. I was traveling a lot recently, and I was using this example of we use paper to authenticate everything that we transact, even people. If you don't have the right papers, you can't cross a border. And if it's expired or you've lost it, you're out of luck. And I think that the transition of when is a piece of paper identifying you or a thing or a piece of trade, that's the play, whatever that is.
It's a very broad kind of outcome that you could see from this. Is there's some more sort of practicalities we could look at in terms of a killer app that would drive us towards this type of future?
Well, I think most of the growth over the next 12 to 24 months is going to be playing to what is Bitcoin's greatest strength, which is cross-border transactions where there's just tons and tons of friction. The world runs on T+3 just here domestically. T+3 meaning financial transactions in the United States takes 3 days to settle. And when you start dealing with cross-border transactions, that can be T+5, T+7. And so that's what Bitcoin does best. We're not seeing sort of the consumer adoption at the rates that everyone would like or hope for. But so I think most of the growth is going to come from companies that are either providing remittance type services, either for individuals or corporations, but in such a way where the users don't even realize they're using Bitcoin or blockchain technology, because it allows you to settle transactions across borders faster and or cheaper. And so you see on the consumer side some cool stuff, as well as on the business side. One of the companies I like very much that we're both investors in is a company called BitPesa. I think Africa, because it's got the least amount of infrastructure and incumbent sort of players that would be trying to create roadblocks, I think of Kenya and Africa as kind of ground zero for sort of Bitcoin and where this technology can take off in a sort of mass adoption type fashion. Kenya in particular, because of 68% of payments over there are made today using cell phones, using a digital currency called M-Pesa. So the human behavior has already been trained. And I think that you could see in a very short period of time mass adoption. Similar, and the human behavior is important in the same way that Apple Pay is kind of not taking off. It's because we have all got credit cards in our pocket, and the incremental benefit of pulling out my phone is minor.
This episode of Let's Talk Bitcoin is brought to you by Tokenly. Tokenly. Limitless tokens for a tokenless world. The magic word for today's episode is blockchain. That's BLOCKCHAIN. Blockchain. You've got until the 12th of September to visit letstalkbitcoin.com or the Let's Talk Bitcoin iOS app to enter it for your share of the listener rewards. So there was a very shrill fire alarm that lasted for about 2 minutes worth of this panel. I'm going to save your ears the strain and just summarize what happened. The question is asked of Brock Pierce, quote, do you see an opportunity with the convergence of crowdfunding technology and blockchain technology? His response can be summarized as, quote, I think that crowdfunding is democratizing the world of early stage financing. Blockchain Capital, that's his company, runs a syndicate to allow others to co-invest. And he's hugely supportive of crowdfunding, and they try and take every deal that they do to crowdfunding in some capacity or another, assuming that the team is not against it. The follow-up question was, do you know any companies in particular that are focused on this convergence? And we rejoin the conversation now with Brock's response.
Well, I mean, look at a lot of, you've seen what are called crowd sales, which, a lot of the industry has actually been kind of playing around with, ideas around how to run a crowdfunding campaign. If you look at things like Ethereum, that was a crowd sale where you got tokens, but that's crowdfunding directly from the community of, sort of interested participants. The distinction here is crowd sale versus crowdfunding. You're not supposed to be selling equity unless it's to accredited investors, but those, that landscape is changing rapidly as well with the Jobs Act. I mean, you're right in the heart of it, but you're seeing distributed sort of means by which, people can participate in the financing of bringing a product to market. And
all right, Mark, I wanted to jump in. I want to get a little bit more specific about, if you're founder of a blockchain startup, you're looking for funding. I mean, what do you guys look for in a company, in a founder? Are you primarily hiring for an idea, for talent, for the intellectual property, a user base? What are the key elements that you really jump out to you, say, this is a company I want to dig into and really understand?
Well, first it's very similar to all other investment areas that we invest in. It's really, the main thing is always the team. You look at the people. Are these the right people to run this? Are they motivated by, are they passionate about it, or are they motivated by more by making quick money? Because that's not going to work. Are they hardworking people? Are they smart? I think smart people are the best people to work with, even though they can be a bit stubborn sometimes. Stubbornness can have a negative side, obviously, because some people have this one idea, they want to make this idea, but when they realize that, or when we realize that it's not going to work, they don't really want to change it. So the team is the most important thing. The IP is much less important at the early stages. User base is not important in the early stages. It's about the growth rate. I mean, they have to grow quickly, of course. We try not to get in too early. We want to see some traction first. So really in a very early stage startup that's raising money for an idea, we probably won't get in. We used to do that, but we're now getting to more later stage investments.
And what's more important to you? Is it a business idea, or is it would you rather hire somebody with a business background or a technology background in this, or is it really hard to, it's impossible to say one or the other, you have to kind of separate it out?
I think it depends on where in the stack in the ecosystem they would sit. And I think to re-echo your comment, I think we're in a very early, still a relatively early stage of the development of this industry where there's a lot of moving parts and a lot of things that are really unknown. So the team really does matter a ton. And if there's a way to sort of pick people that have a good kind of picture for what the system kind of looks like, where the holes are, where it might go, and they just apply their talent to solving those little cracks. Some are going to be technical, like, I think one of the areas that would be, I think is very needed, I don't know how investable it is, but the notion of sort of an API that sits across the blockchain that makes it easy for developers, that's very needed. You'd want somebody that's technical there. But if it's an applications layer thing that's sitting on top of that, the more business background somebody has that can see what to build. That's
I was talking to some folks at a startup unnamed, but they were talking about how the technology folks are at this stage of the game are really interested in, a lot of them are interested in protocols, which are not really a direct line to a business. Versus guys on the business side who are really looking for solutions-oriented kind of stuff. They're saying, there's a problem, we need to solve it, let's figure out how to solve that and deliver a product to market. And then you get technology guys who are like, well, we're really building this incredibly imaginative infrastructure, we don't know quite where it's going, and we really want to work on the hard technical problems of building out the protocol.
Well, what is needed, I think, like every technology-based industry goes through that. Like you think about the beginning of the semiconductor industry, you had a bunch of physicists trying to figure out how to make efficient transistors. But over time, it became, in a way, an applications layer. It may not seem like that to people that aren't in the chip area, but a microprocessor, the value isn't necessarily the transistors. It's how they are expressed, how the blocks function together in kind of a system. And I think we're beyond that part, I think. But I think the underlying pipes have to run very well. And that opens up the opportunity for people that don't focus on that to add richness to the system. And I think, both of those are going to be needed.
Steve?
Yeah, I think it is important to remember that, this is a technology looking for problems. It's not like someone came along and said, hey, everything's broken, let's invent Bitcoin. One person did, I guess. But, we're finding new applications for this technology all the time. So we're typically looking for, people who are trying to solve something big. And, little ideas are challenging to invest in because, they become features for someone else to buy. But those are clearly the best things to find, and team is a very important part of what we look for. And we're lucky to have a lot of great technologists in this area, so we typically aren't super short of that issue right now.
Are there any red flags that leap out at you when you're looking at an investment opportunity to say, okay, this is either not ripe or there's some clear avoid kind of a signal?
Yeah, they got a kite surf. I mean, the obvious stuff, we always do background checks. I mean, not super deep, but, we do due diligence on people. We call people, call references. Track record is important, but, having tried and failed at something can be as important as having tried and succeeded, because you often learn a lot in a failure. But I mean, a lot of it is it's also like choosing a co-founder. Like choosing an investor is like choosing a partner. It is choosing a partner. You're looking for somebody to be with you for the long haul. So the chemistry has to work both ways, and that's probably the biggest part of anything we do.
Just turning to the sort of the timeline for liquidity in some of these investments, are you guys even thinking about what kind of period you're looking at for liquidity on some of these things?
Well, I mean, the industry is accelerating, rapidly. I mean, we've got, I think, nearly $1 billion of capital has been invested into the space by VCs and angels around the world. That's more than 1996 internet. And so as that capital is deployed and turned into products and services, which we'll see over the next 1, 2, or 3 years, I think that you'll start to see sort of acquisitive sort of behavior by the big incumbents. I mean, the banks are coming on board at a rate that I couldn't have imagined. We're getting sort of widespread buy-in from the major financial institutions that I would have thought would be still a couple of years from now. And so now that interest is there, now that they're exploring and playing around with it, I imagine we're going to see some meaningful exits as early as next year, which is faster than I would have assumed.
What do you think of Coincilium and the IPO?
Which? Sorry?
Coincilium in London?
I mean, so they're essentially like a public fund. So they had an original vehicle that they had raised money through a sort of a crowdfunding type play using Havelock, and now they've evolved into probably a better vehicle and structure for what they're doing, which is it's an AIM listing where they're going to, I think, raise $10 or $20 million, and they're essentially a public venture fund. So I think it's great. I think the industry needs more capital. There's maybe 6 or 7 sort of kind of dedicated investors that focus on this as an industry. And the combined capital of all of us is under $100 million. So the industry needs more capital, more dedicated investors, and always happy to see anyone new, coming into the space. Most of us, Steve and I have co-invested in probably a dozen companies together. None of us have enough capital to do this on our own, so I think it's a great thing.
Bill?
Yeah, Timeframe is a funny thing because I think it's less a function of the company and industry and more a function of the cyclicality of exit markets. I mean, there are some periods where anything can get liquid, which we saw in like 97 through 99, and we're not quite in that now, but I think we're in a more liquid period right now than we were 3 years ago. And I think it's the cycles there that dominate whether something can get liquid quick or not. So I think I've been venture funding companies for 25 years, and I don't actually think about I don't have a time frame in my mind when I make an investment. I tend to look for something that I think will be potentially a foundational layer of the ecosystem. Because in the best scenario, you're funding things that you would never ever sell because they just keep getting bigger. And of course, that doesn't happen very often, but that would be ideal.
Well, the problem, of course, is that funds have a lifetime, right? So your LPs want to get their money back. I didn't fully agree with Brock. Actually, I think when I look at the market right now for for blockchain technologies. We don't expect exits in the next 4 to 5 years, actually. We may see exits to banks, for example, buying technologies or buying teams, but like a big IPO or so, I don't see it happening in the next couple of years. The market is too small, regulations are not clear enough yet, so it's going to take more time, I think, than an average VC investment.
I mean, I'm not sure if the time scales are truly speeding up or not. It may be the case, but I mean, traditionally, you're looking at a 7 to 10 year hold, right? And so especially any of the large IPOs, closer to 10 years. It just takes a long time for a company to mature to that point. So.
Depends on stage too. Like if you're a seed investor, it takes a really long time. If you're late stage, yeah. You might try to do something in 3 years and plan for it, but we're mostly early stage because the industry's so early.
And to Brock's point, the entry of the big traditional financial companies into this space, that creates a whole different kind of exit opportunity. How has the entry of those companies changed the market? Have you guys noticing it in deal making, or are they showing up at the same meetings as you guys, or how are they manifesting in terms of pursuing these kinds of deals?
I mean, most of the banks are not yet looking to make direct investments or buy things yet. They're doing what they should be doing, which is they're getting smart, by rolling up their sleeves and playing around with, the technology. And a lot of them have been doing that for the last 12 to 24 months. It's only been in the last few months that they've been very public about these actions. Companies like Deloitte, I think, have 90 employees working on blockchain-related, sort of activities, and almost every major bank has a working team, dedicated to understanding this technology, understanding the risks that it presents, as well as the opportunities. And, they're getting smart. You're going to start to see, I think, action. You'll start to see stuff over the next 12 months. And that is that thing that could lead to, some potential acquisitions. But I'm not seeing them from an investment perspective. But they're showing up. You'll see at most of the large sort of Bitcoin conferences or blockchain-related conferences, bankers walking around and asking questions, and there's more and more of that now. They're even hosting events.
Is there any sense of who is taking the most innovative stance in this regard? Is it Citibank? They've got their Citicoin going, and R&D. It seems like they're investing pretty heavily. Is there any particular players who are kind of rising up as being the most forward-thinking?
Goldman Sachs made a direct investment in Circle. So, I mean, that's kind of they've taken the biggest step. Royal Bank of Scotland has just announced that they've got $3, $4, $5 billion dedicated to kind of new technology, and they're very, very focused on what's happening here. The chairman of our advisory board is the lead independent director at RBS, and so they're very smart. I flew over to Australia recently, and I met with one of the largest financial institutions there and spent a half a day educating them at their offsite, and they've built an entire smart contract end to end. I'll leave out specifically what it's doing because it's not known, but I mean they're building prototypes and actually experimenting, running their businesses on an entirely sort of blockchain solution end to end, including things like smart contracts.
I'm not so sure specifically with respect to blockchain, but I've been most impressed with BBVA, the bank that bought Simple, and they really are from the top down. They've actually inverted their whole management philosophy to lead with technology. So I'd watch out for them for sure.
They've also invested in Coinbase.
Coinbase, yeah.
And I like NASDAQ. It's not a real financial institution, of course, but I mean the fact that they're using the blockchain for their private market, I mean that's a major step, I think.
It looks like a lot of these players in the government, even governments, are trying to start their own blockchains. What do you think about the viability of that? I mean, it comes back to a question I asked kind of earlier in the session. I mean, how viable is it, and do we eventually get a separation of these types of services from the Bitcoin blockchain? Or I think one of the presenters earlier today kind of showed a graph where Bitcoin ultimately catches up and surpasses.
Yeah, actually, I'd like to dig into that too, because I don't think we really addressed it, like other panelists' opinion here. But is there such a thing as lock-in with respect to the particular Bitcoin blockchain, or is it the case that there's going to be crossing technologies where, okay, so the banks have their own and governments have their own, there's Ethereum, et cetera, and yet they'll all interoperate because fundamentally blockchain technology is like IP, Internet Protocol, in that as long as you talk the fundamentals of blockchain tech, you can have as many different blockchains and they'll all interoperate just fine.
I think the answer is yes. The way I look at it is, you know, inside your company, there's no reason why I need to go and address your printer to print something, right? But it does have an IP address. And that printer can see the internet, but I can't see it, right? So in the same way, I think you're going to have private blockchains which can see the public blockchain and information stored on it and can see information. Say if you've got Citibank and Morgan Stanley doing something, you know, very financially oriented, some kind of, you know, private stock trade or something, they're going to be able to see each other's information that they're making publicly available, but the internal workings are hidden, but they're not hidden to people inside those organizations. Now, the currency that's used on one or the other, I'm not sure it's super important at this point. In the end, I think all these things will converge to the Bitcoin blockchain becoming the kind of the main, you know, highway or whatever, the main bus for this information, and then these private, you know, ledgers and buses will be internal to organizations. It'll be the same technology, I think, in the end. It's used everywhere.
Is this sort of the comparison would be to an intranet, corporate intranet, or VPN versus open internet?
I think the debate is largely only occurring because, you know, Bitcoin's got a reputation problem, and the visceral reaction from a lot of these larger financial institutions are, okay, we get it, we like the technology, but we don't like being associated with, you know, Mt. Gox and Silk Road and things of that nature. But I think they'll get over that at some point, and they're going to understand that there's a benefit to using this giant distributed network of computers that they don't have to pay for, versus, you know, building up, you know, isolated instances that they have to. I think long term makes sense, and the companies that are out there building and productizing on top of Bitcoin's blockchain, companies like Chain, for example, you know, have a great team of developers that are, you know, going to help these institutions, you know, get the products that they need to market, and that's being built on top of Bitcoin's blockchain. So, I mean, yeah, I think you'll have a number of companies that set up, you know, their own sort of ledgers using, you know, some other, not Bitcoin's blockchain, but I think over time the benefits of using Bitcoin's blockchain are there for everyone, and I think long term it wins.
Yeah, I agree. It's basically an economy of scales question, right? I mean, if you get enough nodes of commonality, it's cheaper to make the silicon and run the electricity and everything else if it's sort of standard. And having your own little thing, it's kind of like, you know, proprietary computer in the face of the PC at some point.
Or Minitel in France.
Yes, yes.
Yeah.
So I want to end this with a question to RAFE, was a crowdfunder. What are the prospects that blockchain and Bitcoin disrupt the investors, and we have a new model that creates completely new systems for financing and creating, giving smaller investors equity in startup companies, and does that pose any kind of long-term disruption to the standard VC model?
Well, I mean, I think it's already happening just with crowdfunding in general, but you're already starting to see with these crowd sales that really look a lot to me like equity sales at the distributed crowd level. So, for instance, Swarm and Ethereum had these $10 to $30 million, seemingly overnight, equity raises. Maybe they're not equity, but you know, they serve the purpose of funding the company and getting them off the ground in the same way that, you know, a big venture capital round used to, and it's extremely democratizing and empowering for anybody who's interested in you know, bringing their idea into the world. So I think it's already starting to happen. It's inevitable. It's a question about whether the governments are going to figure out how to get on the side of it or really create problems. But I'm actually very encouraged by the, you know, the way that the regulators in the various departments of the U.S. government have sought to get in front of it and be collaborative in this case. Yeah.
And yeah, what you're seeing as well is, I mean, some companies you cannot even invest in, like Lazuz was mentioned this morning. Basically, they are trying to disrupt the Uber market, I would say. I would love to be an investor in them, but if you buy their tokens, they cannot be sold, actually. They're used for their service in the future. So as a VC, there's no way to get in there. I mean, you're not going to buy these tokens and tell your LPs, you know, we have these tokens in a car sharing service. And that is a risk for the VC industry, I think.
What about Jan Tallinn? Did you read the news about his new equity fund that he's trying to put together? It's called Thunderbeam. It's based, he mentioned blockchain and the ability to have instant liquidity for investors and a whole bunch of new kind of features around that stuff. But I'll just throw it out there as one more thing to noodle on.
Thanks for listening to episode 244 of Let's Talk Bitcoin. Content for today's show was provided by Keynote 2015. This episode was sponsored by Tokenly.com. This episode was edited by Adam B. Levine and featured music from Jared Rubens and General Fuzz. Have a good one.